Welcome to the Driven to Succeed Real Estate Podcast. And today our guest is Erik Ruhland from the Erik Ruhland Agency. Co-host today is Terry Torito. And Terry, you want to give us a little market update on the real estate side from Minnesota?
Absolutely. I was looking at it. I pulled it this morning. This was just for the week ending in May 28th. So just a quick little update. I found some interesting stuff out there. And this is for the Twin Cities area.
11 County Metro, right?
Correct. So new home listings did increase 0.1% to 1,608, and pending sales went down from 15.4% to 1,451 homes, and but overall inventory has increased 4.6%. To 6,772 homes, which is pretty good. But then also for the month of April, that median sales price increased 10%,
right,
to $370,000.
It's crazy. Year over year, we're over 20% from last year.
Erik,
Erik,
you're going to be insuring a lot more for houses.
Things are changing,
right?
It's going to be something that's ever changing, right? And we can keep up with that, but
correct. Yeah. So
interest rates,
just a couple short months ago, we were sitting at about 4,400 homes. So we did get a nice bump for the spring market, and now we're kind of keeping that flow. And I think we'll be continuing that increase over the next coming months. So hopefully we can keep having less multiple offer situations, and borrowers are easier to get financing and so forth on these. As far as financing and average mortgage rate we pulled today, that was about 5.5 nationwide. So I know some places would be a little bit less. That's a 30-year fixed mortgage. I know there's a lot of ARMs that are being talked about out there. They're still not super advantageous. They're only like quarter of a point, maybe 3/8 of a point off the market, for a 7-year, 10-year, and I've seen one today at a 15-year ARM. So some different products are coming for the mortgage industry as far as rate terms and products. So interesting enough, but today, Erik, from being an insurance agent, and you offer auto, the whole works, right?
Yep. Home, auto, umbrella, life, commercial, kind of top to bottom, a little bit everything, really everything outside of health insurance. So, kind of like you mentioned, it is kind of an ever-changing thing. We try to stay on top of some of those changes in the market, but, having contact with our clients from start to finish, being in communication with you guys is really where that starts.
Right.
So.
Right. And being able to provide, I know you've been pretty quick at getting quotes out to us and working with us. Some companies have been tough to deal with, and then, with clients, and it's like, and we got a quote. Okay, it wasn't finalized, or wasn't this, wasn't that. So we really appreciate your ability to turn those quotes fast and get us what we need when we want it to. So
for sure,
that really helps lenders overall and clients. When it comes time to, investors have been increasingly harder too with binders and stuff like that, and they're saying, "Oh, it's only a binder. It's not really placed insurance yet," and they were asking for more in addition to now.
Right. I know you guys have plenty on your plate, right? You got plenty of paperwork, and not to mention the clients. So trying to make that process as seamless as possible for them and you guys is really the goal at the end of the day, just to make your job a little bit easier.
Right. We appreciate that.
Yeah, and let's face it, a lot of people are like, okay, I need homeowners, specifically first-time home buyers. They don't know what they need, right? So.
Yeah, for sure. So, I've been in...
I was going to ask you that. How did you get your start in this business?
So, I started off in insurance, just strictly life insurance. I started off with Northwestern Mutual in college. Transitioned to American Family, worked under an agent he's been in the business for about 30 years now. And I ultimately knew I kind of wanted to get to a position where I was in the driver's seat. I had my own agency, and I could build out a team and get to that point. But, one thing that you see right now, as opposed to 6 years ago, is that change in replacement costs. And it's something that, like to your point, Brandon, is something that insureds don't necessarily know about. Those replacement costs, lumber and material costs have been all over the place
Astronomical.
in the last 2
Yeah.
years. Yeah, what it costs to replace a house 6 years ago looks very different now. We had houses that were anywhere from $125 a square foot to $150 a square foot to replace, and we're seeing $175 to $200 plus now.
Yeah.
So
Is that smart for someone then to actually, like, I was just thinking for myself then, like, does a person, like, do you re-look at your insurance right now in this time, or do you just kind of let it roll because of inflation? What are the steps a person
question.
should take there,
Well, 100%. People get in the habit. You want to talk insurance. Some people want to put that aside and let that be
Right.
for 5 years. But, if we have a total loss tomorrow and that house hasn't been reevaluated in 5-6 years, we might be short 20-30%. So I think it's a living, working, like breathing document that you should be updating every couple of years, especially in the environment that we're in right now. Things are changing. And I send out personal insurance reviews every year, if not every 2 years, and just try to get an update on what are your goals, what are you trying to have covered. And these things change, obviously from year to year. So just updating things to keep pace with their goals, but obviously keep pace with the market. Like I said, with building material costs, it's been a lot of changing going on.
Yeah, the last thing you need is some straight line winds knock a tree over, and now you have some major problems, and then you're not covered, right? You're like, well, your replacement coverage is only X, and it hadn't been updated in a long time, but now the cost of the repairs are going to be this, and now what do they do? Like, how,
Right.
Right.
That's a tough conversation,
Right.
And so we make a point to send out a couple reminders at least twice a year. Just let's sit down, let's review these things and make sure we're on pace with where we should be.
To be proactive, so that way you're not looking like the bad guy when it happens, because that's what happens, right? They want to fight with you.
And then they're going to raise your
because-
insurance.
Oh God, yeah. Yeah, and that's the thing. You want to you're doing this for them, right? You're being proactive, like to your point, Brandon, in putting them in the best position possible, whether it's something they don't want to review every year, but they should.
Right.
We're just trying to put them in a position where if something were to happen, we can make you whole again. And that's, our time to shine is when something does happen. So
and it's funny because I recently just had a client where their apartment building started on fire, and their unit was one of the units was a total loss, and they're talking about all the stuff that they lost, and I was a kid, our house burnt down when I was 5 years old, and we lost everything because it was a complete loss, right? So it's crazy, when people think about it, but then it's well, you're not only did you lose all your stuff, but now what do I do if the costs are 20-30% more? Right. So now you're hurt on top of it even more from emotionally, and now
Right. Now you're not going to get any windows in your house.
Yeah, right. We'll just cross off a couple things you used to have.
Right.
Sorry.
In tough times, we all have to take take our losses.
Well, and unfortunately, sometimes that's what happens. People don't have that perspective that you come to the table with because you've seen it, you've felt it. And, for some people, it takes till after that happens for them to shift their perspective and be like, these are some things we need to put into place and be proactive on, before they happen. But it's tough. People don't want to think about insurance, right? It's just something that's kind of on the back burner.
True. It always
right?
is. What kind of areas, tell us, what kind of areas, what do you specialize in? What is your main?
Yeah. So I would say bread and butter are residential, home, auto, like I mentioned, umbrella, life insurance. But about 25% of my book is commercial. So that's everything from, duplexes, multifamilies, up to habitational, apartment complexes and everything in between there. So a good mix. We see, I deal with kind of a variety of things, but my go-to probably most common is working with people getting in their first home. And it's fun because it's an exciting time. They're getting into it's the biggest purchase of their life, right? So you want to steer them in the right direction, put them in a good spot, and at the end of the day, just make them feel comfortable.
Right.
You do a very good job at that. A lot of our mutual clients have been very happy the way, just
Good.
Honesty goes a long ways, and you're very personable, which is nice.
Well, and I like that you bring it up because we feel that we're super personable with our clients, right? And a lot of lenders and insurance companies, for that matter, have gone to so much digital and they get out of that relationship, right? So it's, yeah, you can give them the cheapest quote out here, but is it the best? I mean, is it like when I have a problem, who am I going to talk to? Who am I, like who do I get back to, right? And
100%. Yeah, there's so many nuances, excuse me, with regards to your home coverage. And, you could have 10 quotes laid out that have X amount covering your dwelling and a deductible. If you're not looking past that, you might run into some things where, like we mentioned earlier, aren't covered. Right. You're in trouble. So walking people through that and really painting a picture for them is just kind of another level of planning that I think needs to be done, and that can get missed when you're trying to get quotes out really quick and get somebody a premium, say, here, you're good to go, take this. So
what do you want? I mean, because insurance is tough. Nobody knows about it. What do you want your clients to know about insurance?
Yeah,
I want to know,
Well, again, I'll go back to the nuances. So there's so many little things that go into an insurance policy, and it's not you can make it as simple as you want, right? Like I try to walk through, I mentioned earlier, like the cost per square foot. I try to give people a high level understanding of what we're doing, but not get into the weeds too much because it can be a little overwhelming. But, understanding your clients too, like you guys mentioned, you're personable. You need to understand, is your client super analytical? Do they want to walk through all these numbers? Do they want to see every single endorsement? Or should I just touch on some of the major ones that are kind of key points that people need to know about? And yeah, just having a feel for how they're wired, I guess.
Absolutely. I mean, that's part of this podcast is to show the realism of us, right? And being how we're personable. And, getting to know our clients is some of the best things that we can do, because we are considered salespeople, right? But I came from a high stress, high environment, sales in the car industry. And it was, my job was to make as much money per car as I possibly could. And
right.
Today it's much different. It's, I believe it's more of a service providing. I'm not trying to make there is no difference, right? I don't mark anything up. I can't mark anything up.
Stay between those lanes,
right?
Yeah.
So, it's we're assisting you to buy a house, or you're assisting them to get their coverages and so forth. So, when it becomes like that, we become personable. It's not sales anymore, in my opinion. I stress it all the time to the team. Is like, we're not selling per se. We are assisting people, because we are literally here to find the best products for them, whether it's a mortgage product or whether in your case it's an insurance product that's going to meet their needs, right? Yep. And we're helping them get to the finish line and get that product so they're covered down the road, or they're, that we have their best financial future in mind, right? It's not simply going out there and say, here's what you get and there you go, right? Because that's not sales anymore.
Right. That's a transactional relationship,
Right.
Do you find people though, they're like, okay, like
just get it done.
They don't know. I remember you telling me that time, because I always say, that comes almost brought to my next question, like, what should you be insured for? Like, if your house burns down, I remember you telling me once, like, is the basement not covered? It's only ground up. Am I right on that?
Well, so we're covering finished square footage. But one thing we've been doing more recently now, because of these change in material and lumber costs, is I'll get in contact with local contractors in that area, maybe one or two, and just kind of run through evaluation of a home and say, in your opinion, if we were to break down this house and we had to rebuild this tomorrow, where do you think this would fall per square foot? Because there's such a variance in between a house built in 1986 or a house built in 2022 with crown molding, bamboo floors, quartz countertops, right? Like, there's a huge variance in cost per square foot. So if I can break that down and get a more honed in number from somebody who quite literally builds houses every day, I feel much better about where we're at, and then I can relay that to our insured. I know wholeheartedly we're going to be in a good spot.
Well, and that's why people go to you versus just go online to Progressive or some of these other online.
Get an online quote.
Yeah, cheap easy might save 15%.
Yeah,
right.
But there's
still
a lot more.
Cheap. And it's
yeah, cheap is cheap, and we're not going to always win on price, but to your guys' point, there's many layers to that, and the relationship is huge. Somebody you can trust. So
Yeah,
and
and
it's nice to have a guy.
Price is always like number one, but is it really number one? I mean, think of it this way. Look at all the stores that are out there, from the Walmarts of the world to the Dollar Generals to the Macy's to the Costco's, right? So everyone has their own niches and everyone serves different segments. But being able to, and I would assume like the same thing with us, we have so many different mortgage products. I mean, some people might want a 15-year product, right?
Yep.
Because they want to pay it off fast. They have the ability to do so. Other people like, well, that would cut into, saving for my kid's college fund, certain things like that. We got to get to know, right? So, but being able to provide and then talk to them about the house, right, and find out what's really in that house and what's important to them. Because you're right. I mean, if you got quartz countertops, I just got some last year. They're not cheap.
a little different. Yeah. Right.
Right.
You need to account for those things.
Right.
So,
Right.
certainly.
Yeah, and then the Home Depots of the world and the Menards of the world that give everybody the ability to go do it yourself.
HGTV.
Right?
Set off a whirlwind.
Resources are out there too,
Yeah.
right? Everyone, it's at their fingertips.
Right.
So.
And which then in turn made way more products that are higher end or lower end, right? So depending on what's what is key to all of it. So
Well, it was funny too, because I don't know if we talked about it in a past podcast, but like I said, it's because of HGTV, Home Depot, Menards. You also even say 30 years ago when our parents bought their first houses, people bought houses to just live in their house, not to redo the whole thing every year, redo every room. Like it's crazy how it's,
right. People have a whole different vision now.
Whole
I feel
different
like
perspective.
Yeah.
It's not enough just to have a house. It's, oh no, we got to open it up,
Right. Knock that wall down.
Yeah.
Is that load bearing?
Yeah.
Can we knock that?
I was just over at Johnny's. Did you see
Yeah,
what they did?
yeah.
Oh my
Yes.
God, that backyard.
It's
Right?
unbelievable.
It's crazy.
Yeah.
It is what it is. I
Yeah.
mean, we all kind of go through it, and we all, like, I see some stuff. I'm like, wow, oh my God, that's awesome, right?
Yeah, you guys did that yourself. Right?
Yeah.
You could do that.
Right.
Right.
Speaking of which, do you have people when you do have a claim and like, hey, I want to do this myself? Are people able to do that, or do they have to do a contractor?
Certainly. Yeah. And that's, that kind of plays into the deductible piece. Some people have, and this is kind of a philosophy thing. So some people will raise their deductible thinking, if I have a claim, if it's relatively small, it's something I can handle, I don't want to claim on my record. They can put that kind of on themselves to handle. Mm-hmm. And someone that has a lower deductible is going to have a little bit higher premium, is saying anything that I can turn in that's a claim, I'm turning in. I don't want to touch any of this. Let's turn it over to the claims department, and they can handle it. There's no right or wrong answer there. It's just, what do you kind of feel that you can tackle on your own? And it plays into a little bit of a cost standpoint too. What, based on that deductible, what can you afford?
So what is that? So if a person makes a claim, what is everybody's insurance going to go up? Is that like how is that? Because I remember I had a claim on my house because my neighbor's tree hit my house. It was an act of God. My insurance premium went up $1,700 a year. So my insurance person called me and goes, we need to look for a new insurance company. I was like, how can they do that when it wasn't even? It was like I said, it wasn't even my tree.
Right. Right. And that's an unfortunate circumstance, especially because it's not your tree.
Right.
But, there's non-chargeable claims and chargeable claims. So things that are due to weather like hail or wind damage shouldn't be chargeable. And when I say shouldn't be chargeable, meaning it's not going to affect your rates from that claim. But if we have enough claims in one year, statewide or even in the Midwest or nationwide, we might have slight rate increases because of the volume and severity of claims.
So if there's a big, huge storm that came through and knocked out a whole town,
Exactly. And we've seen that.
It happens. We're seeing it in the South.
I mean, it's a record. I mean, I think we had a record high amount of volume of claims in the last 20 years. In this last 3 weeks, we had 3 separate storms come through with hail damage. So we have catastrophe teams that'll come out and handle. We can allocate resources to take care of that. But it's like if we're shelling out millions of dollars for all these different towns and houses, company has to have slight rate increases to account for that because they're shelling out so much.
Right.
So,
on top of our point earlier is the costs have gone up so much that it's the cost from year to year. I mean, we're talking. It'll be interesting to see what the CPI comes out tomorrow. What are new, inflation rates are going to be, and so forth. That's a whole nother different discussion.
Another rabbit hole. Yeah.
Right.
Yeah.
We might have to have cocktails for that one.
Right.
Yeah.
Yeah. Based on I haven't seen so many people in the last week just saying, I think I started it I just filled my tank and it was $122, right? It's
Yeah.
The same thing.
And anyway, we can't go down that road.
It's not cheap. Let's put it that way.
Eric, do you have any personal stories that you've had with clients, and don't have to say any names of anybody or at all, but that
Don't mention me, Eric.
Yeah. We'll leave you
that
out
was
of this.
was some kind of a success story and why where it worked out really well for them or.
Yeah. I mean, I have a variety of stories, and some that are, more recent, some are a little bit older, but I have one actually specifically, it was a week ago, and it has nothing to do with home insurance. It was actually life insurance. We have questionnaires that you go through, and this person was ex-military. He's about 60 years old, and I had the underwriter call me the next week and asked. She's like, I've never had in 16 years someone say yes to every single thing on here. We're talking motorcycle racing, skydiving, scuba diving. I'm like, is this guy serious? So the best part is he doesn't do any of these things anymore. He used to. He's ex-military. But he felt the need at this time to just elaborate on these things that he used to do and say that he does them now. I'm like, we got to have a conversation. So, but yeah, that one came to mind because it was so recent.
Yeah.
But I've had, I would say fraudulent claims are pretty common, unfortunately.
Wow.
Yeah.
With jewelry, fur coats gone missing, and they've been found at a storage unit, things like that. I've heard of people getting on roofs and taking a hammer, to their shingles trying to get insurance claims, which get in a little trouble doing that. So,
Yeah.
Right. So
You'll always get caught.
Don't do fraud.
Yeah, don't do fraud.
yeah, please save yourself.
Right.
But I don't know. I think I mentioned this a minute ago. Having, sometimes there's a perfect storm of inflation going up, and we have hailstorms that come in, and our costs are going up. To be set up to be able to allocate resources like we have been the last few weeks feels really good because it's our time to shine and our time to, on people's worst day, we can come in and make sure that they're taken care of and made whole again. I've seen that more recently than anything with this claim severity.
Yeah, I mean, I think a lot of that gets missed a lot of times, right? So when you have an accident happens, right? It's not only hey, we're going to get your house fixed, but in the meantime, we need to get you somewhere to stay, right?
Yeah.
We need to get you, maybe your car got damaged in the meantime. We got to take care of that. So you're there to help those people instantly, right?
For sure,
and provide those resources. So I think that gets forgotten a lot about in the process until it happens, until you actually go through it. That gets forgotten.
I agree. That can get missed, and like I said, if it's our time to shine, I want to make it known that we're making an effort to put them in the best spot possible, when they need it most. So. That's felt good in the last few weeks because you don't always have that opportunity. You feel like you're just paying insurance premium. Your insureds are just kind of, there. And when you have a larger volume of claims, it's like, okay, here's where we can show, our true colors and what we have to offer here.
Is there really people who have 3, 4, 5 claims, 6 claims a year?
Oh my goodness, yes, yes. And yeah, you kind of get categorized in different pools, once you have 1 or 2 or 3 claims, it's just.
Oh, John's calling again.
We already know what's going on here.
What happened today?
Yeah, exactly.
Fell asleep with my cigar.
Oh man. Yeah. But you get a variety, and there's, like you said, you have some that you keep an eye on. But for the most part, it's pretty low key. We don't have too many of those where you're just suspicious claims or things popping up or red
flags and
yikes. Yeah. Yeah.
Right.
Well,
And again, it goes back, and this is why, when I'm always referring agents or insurance agents to my clients, and I have good relationships. But it always goes back to, when I see the online ones come through, and then I've seen some other reports, and then they have a problem 2 years down the road, and all of a sudden I'm getting a call. I'm like, well, I didn't, I don't really have any part of that process. But when they're using someone like you, you are that kind of main go-to for the most part, right?
Yep.
Yeah.
Yep, for sure. And one thing I would challenge people to do, because it's easy to just, look at your quote, like I mentioned earlier, and just say that looks good. But I would challenge people to ask their agent, and this is just kind of a general, what are we covering per square foot and why? Like, how did you get that number? Because in the past, so many agents did this where you would cover a house just based on the market value, what you paid for. So you might have bought a house for $450,000, and we just slap a dwelling coverage on there of $450,000. It's like, well,
Right.
in an extreme example, let's say we bought a house on Lake Minnetonka, and it's $1 million house, but it's only 1,000 square feet. Well, we might not insure that for $1 million. Probably not.
Right.
We're going to be insuring that for $450,000, $500,000. It's all circumstantial, but having the idea how they got to that number, I would always ask how you got there, and why, and just kind of walk through those things.
Awesome. Terry, you got any more questions?
I don't. I think I want to tell everybody that Erik will put your info up on here. So
Appreciate
if people wanted to, reach out to you, get, call everybody. If you have questions, give Erik a call. He's always around. He's been awesome. So definitely we'll put his info up here with his contact information, and give him a call if you have questions. He will guide you in the right direction.
Yeah, absolutely. I want to thank you for coming on the show, Erik. This has been great. Great opportunity to get to know you more as well. And everybody that's out there, wants you to like and subscribe, follow us. Stay tuned for our next guest coming on. I think we have some more real estate partners coming on in the next few shows. So
Sounds great.
Looking forward to seeing you all again. And thanks very much.
Thanks, Erik.
Awesome. Thanks for having me, guys. It's fun.
Absolutely. Take care.
Bye.
Bye.